Everybody, I hope you're doing okay. So on today's topic, we're gonna talk about how do you do top-down analysis when you're trading Nasdaq. Okay, what are some of the things that you need to consider when you are trading Nasdaq? So always start from a higher time frame. Okay, so what are you gonna do on the higher time frame? You're gonna utilize and understand what the market is doing. Okay, so anticipate what the market is gonna do. So first thing first, draw zones in areas where the market turned. Okay, like a significant turn where it prompted a move. And remember, this is a daily time frame. It is important to look at the daily, but as you are going down to your smaller time frame, you still have to understand to say it takes a bit of days for it to formulate the daily time frame. So in as much as you would have this zone drawn up doesn't mean in a single day it's gonna push all the way to that area. Okay, so you have to understand market structure and how the markets move. So overall, if you zoom out and look at it from a perspective like this, the market has been pushing down. Okay, this has been a bearish trend for NAS for quite some time. Okay, as far as the daily goes. Okay, so now does that mean even if you go down to your maybe 5-minute time frame or your 1-hour time frame, you're gonna still see this move? Not really, because this is a long-term move. Okay, as far as you're concerned, this move for these past few days, the market has been pushing bullish from a smaller time frame perspective. Okay, so that is the other thing you need to understand, the difference in time frames and what they are doing. Okay, so this is a daily, this is what we are looking at. We're gonna drop down to a 4-hour. We see also what the 4-hour is doing. Okay, don't complicate your zones, don't overdraw things, because all you need is an understanding of what the market is doing. Okay, so that you can best enter. Okay, because whatever it is that you draw does not simply mean the market is gonna respect the lines that you draw. Okay, as far as we're concerned, this is a bullish trend. Okay, so what are you patiently waiting for? Say, okay, if the market touches down in this area, there's that possibility of a drop to this direction. Is that certain that is what is going to happen? Not really, but you prepare for it depending on the type of candles that might be printed in this zone here. Okay, if we break above retest, then we could continue our bullish move to the upside. Okay, so we can drop down to the 1-hour, because you have to also understand to say the time frame that you're looking at determines how many trades you can open, what lot sizes and whatnot. Because if you have a small account, you don't necessarily need to trade on a very huge time frame. You can have a bias from the huge time frame, but you have to understand when to enter. Okay, so this is a 1-hour. It was pushing bullish, it has broken bearish, here lower low, and it has broken through, and now it is continuing in this bullish move. Okay, so you have areas there that the market came to retest, and now it's pushing bullish. Okay, you always have to create a story when you are going towards your time frame of entry. Okay, but that does not mean you should overdraw things. So now the last time frame we're going to look at is the 15-minute time frame to see exactly what that is doing as well. So as you can see, the market did break above this zone, retested it, and now it's pushing bullish. We have these other zones here as far as the 15-minute. So if you were to say, okay, I'm gonna my bias is still buys as far as this move goes, because there's a level that we might be approaching. So what do I need to wait for? I'm gonna wait for that move, the move coming down here into this zone. Then if it shows signs of continuation, then I can set my buy in this area. Okay, so my buy will be somewhere there. Stop loss will be somewhere there below the zone. Okay, depending on the account size. Target will be somewhere in the daily zone, somewhere there. Okay, you can go for a 1:1, meaning you're risking 1% to get let's say you're risking $50 to get $50 back. Okay, so that could be a thing as well, because you have to know that the market moves up and down. So by the time for it to reach that daily zone, it might take a bit of some time. So for you to be on the safer side, rather than you enter a trade, then you see it in profit, you see it in losses, it just plays with your emotion. Better you have a realistic target to say, okay, if I reach somewhere in this area, I can close in on some profits and let one trade run. Otherwise, this is how you simplify everything.